Charlie Munger is live now, and he gave his thoughts on SPACs, Robinhood, stimulus, buying stocks at high prices, value, and passive investing. In my channel, I only cover SPACs and high growth stocks. I think this is a great video to watch for those investing in these types of stocks. For those who are not familiar with Charlie Munger is Warren Buffett's oldest partner at Berkshire Hathaway for the past few decades. His financial advice is golden, and I think this video brings perspective to all of us trading these volatile stocks. Before I begin the video, I would like to preface that I respect Charlie Munger's opinion, and he brings clarity during these crazy times. This does not change my current positions, but it's always good to hear what industry leaders have to say.
Our next shareholder question comes from Simon Jacobs. He writes, many observers see market behavior that reminds them of the dot-com bubble, wild speculation, endless SPACs and IPOs soaring on their first day of trading. Do you agree that there is a close parallel to the late 90s and this is therefore, quote, must end badly?
Yes, I think it must end badly, but I don't know when.
You know, another shareholder, Bill Roberts, asked about SPACs, and he points out it seems like everyone, including actors, athletes, singers, and politicians, are getting into the business of promoting their own SPAC. Why do you think all these SPACs and the promoter, what do you think of all of the SPACs and the promoters pushing them?
Well, I don't participate at all, and I think the world would be better off without them. I think this kind of crazy speculation in enterprises not even found or picked out yet is a sign of an irritating bubble. It's just that the investment banking profession will sell shit as long as shit can be sold.
Richard Lewis from Culver City, California, he asks, Charlie, last February, you spoke about the wretched excess in the financial system. Given the developments over the past year, could you give us an update on your assessment of wretched excess in the system? Where does it appear most egregious?
Well, it's most egregious in the momentum trading by novice investors lured in by new types of brokerage operation like Robinhood. And I think all of this activity is regrettable. I think civilization would do better without it. You'll remember that when the first big bubble came, which was the South Sea bubble in England back in the 1700s, it created such havoc eventually when it blew up that England didn't allow hardly any public trading in securities of any companies for decades thereafter. It just created the most unholy mess. So human greed and the aggression of the brokerage community creates these bubbles from time to time. And I think wise people just stay out of them.
Our next question comes from Achit Patel. He says, Charlie, in your past speeches, you have mentioned the term functional equivalent of embezzlement to describe situations where bubbles can form because both parties involved in a bubble believe the asset to be worth more than it truly is. Can U.S. Treasury bonds be such a case today? And what are the implications since Treasury assets underpin the value of every other asset? Thank you for all you do to educate us.
Well, no, I don't think we have a bubble in Treasury securities. I think they're a bad investment when interest rates are this low, and I never buy any, neither does the Daily Journal. But No, I don't think Treasury securities are a big problem. I do think that we don't know what these artificial low interest rates are going to do or how the economy is going to work in the future as governments print all this extra money. And the only opinion I have there is that I don't think anybody knows what's going to happen for sure. Larry Summers has recently been quoted as being worried that we have too much stimulus. And I don't know whether he's right or not.
Jason Subatki, he asked, previously you have said, quote, "It takes character to sit with all that cash and do nothing. I didn't get to where I am going but I didn't get to where I am by going after mediocre opportunities," end quote. In the past few years, equity prices have increased significantly, and cash has arguably become riskier due to central banking policy. Have you considered amending this quote or lowering your standards?
Well, I think everybody is willing to hold stocks at higher price earnings multiples when interest rates are as low as they are now. And so I don't think it's necessarily crazy that good companies sell at way higher multiples than they used to. On the other hand, as you say, I didn't get rich by buying stocks at high price earnings multiples in the midst of crazy speculative booms. And I'm not going to change. I am more willing to hold stocks at high multiples than I would be if interest rates were a lot lower. Everybody is.
Cyril Tibbeville, he asked, do you think value investing is still relevant in a GDP decreasing world? And what about passive investing?
Well, that is easy. Value investing, the way I regard it, will never go out of style, because value investing, the way I conceive it, is always wanting to get more value than you pay for when you buy a stock. And that approach will never go out of style. Some people think that value investing is you chase companies which have a lot of cash and earn a lousy business or something. But I don't define that as value investing. I think all good investing is value investing. It's just that some people look for values in strong companies and some look for values in weak companies. But every value investor tries to get more value than he pays for. What is interesting is that in wealth management, a lot of people think that if they have 100 stocks, they're investing more professionally than they are if they have 4 or 5. I regard this as insanity, absolute insanity. I find it much easier to find 4 or 5 investments where I have a pretty reasonable chance of being right that they're way above average. I think it's much easier to find 5 than it is to find 100. I think the people who argue for all this diversification, by the way, I call it de-worsification, and which I copied from somebody, and I'm way more comfortable owning 2 or 3 stocks which I think I know something about and where I think I have an advantage.
I just opened my new store. If you would like to support this channel, take a look and pick up a t-shirt. Click on the link under the description to go to my store. That's pretty much it for this video. If you liked this video or found this information useful, click the like button, subscribe to the channel, and click the notification bell to see more trading and investing ideas. I'm not a financial advisor, and this is for entertainment purposes only. And as always, timing is everything. Get notified so that you don't miss an opportunity.